Listen, as someone who has both leased and bought, my personal preference is What's going on, everyone? My goal in this video is to make it easier for you to decide if buying, financing, or leasing a vehicle makes the most sense for you given your personal situation. I plan to keep this video simple and straightforward and not go too crazy with numbers and calculations. With that said, we'll break down each option and other factors to consider when ultimately deciding which direction you want to go. So make sure you watch until the end so you're well equipped with how each option works to choose which one works best for you. Let's talk about the 3 different ways you can buy your car today. First is you can buy it outright. Make one big payment and be done with it. Second, finance. You work with the bank and give them a deposit and they give you a car loan to buy the car. Third, lease the vehicle, in which case you wouldn't be owning the car, you would be paying for the use of the car unless you decide to buy it after your lease is up. And I'll be talking a little bit more about what that looks like and break that down later in this video. Unless you decide to buy your vehicle outright, you're probably debating between financing or leasing. I've done both and I feel like the most important question to ask yourself when deciding to lease or finance really comes down to this one question, and that is, how long do you plan on keeping the car? Because this actually goes hand in hand with your lifestyle and how often you plan to switch your new cars, which greatly impacts the decision of which direction to go when considering to finance or lease. What I mean by that is if you plan to switch cars every 3 years and you know that about yourself financially, it actually makes the most sense to lease. The reason why is because if you know you want to switch to a new car in 3 years, it would be overkill to buy the car. If you were to buy the car, it would lose value as soon as you drive it off the lot. The transaction cost of buying and selling is expensive, and with depreciation, your car would actually lose value. So it would be highly inefficient and expensive to constantly buy and sell your car in shorter timelines to get a new one. In contrast, if you lease the vehicle for 3 years, you only pay for the 3 years of using the car. You're essentially renting the vehicle for the agreed upon terms from your leasing company. Now that you know how that works, it should make a lot more sense why the monthly payments are lower. It's because you don't actually own the vehicle. Instead, you hold on to it for 3 years before you hand the keys back to the leasing company. So the bottom line is, when it comes to leasing, you're essentially getting lower monthly payments, but the trade-off is that you give up ownership unless you decide to buy the car at the end of your lease. But this goes back to why lifestyle is a huge consideration here, because if you plan on rolling out your lease into a new vehicle 3 years later anyway and leasing another brand new car, who cares about the ownership? Who cares? You plan on driving a different car after your lease is up anyway, right? So you might as well lease in this particular scenario if you know that you're dead set on switching into a new car every 3 years. Also, if you plan on using the vehicle for your business, leasing a vehicle can be beneficial for tax purposes since you can use lease payments for tax write-offs. I would confirm this with your tax accountant though, because based on where you live, things could be different and tax rules could be different based on the country that you're in. So make sure you do your homework. So if all of this resonates with your lifestyle, I'd actually look into leasing and shop around to find what option works best for you and negotiate on the agreement. Yes, leasing agreements are negotiable, so take your time, shop for your best options, and make sure that you're comfortable with the leasing terms before you decide to sign on the dotted line. Now that we talked about leasing, and if that was helpful, make sure you like and subscribe because that does help my channel. Let's dig deeper into considerations for financing a car. For most people, this is actually the most common approach to buying a vehicle because most people don't have like $30, $40, $100,000 lying around to go buy a car unless you're Bill Gates. Jokes aside, when you finance a car, you take out a loan or repay it over time, right? You'll make monthly payments just like you would with a lease, but the big kicker is that you'll own the car outright at the end of your loan term, which is the biggest benefit of financing a vehicle. And after you pay off your loan, this means you can keep the car for as long as you want, and you don't have to worry about the monthly payments anymore because the car is already paid off. Starting off with the financing option, let's break down the advantages and disadvantages of both financing and leasing and chart it out so that it's a little bit easier to understand visually. Ownership, and I said this a little bit earlier in the video, but at the end of the loan term, you own the car outright, and that's one of the biggest benefits of financing a vehicle. No mileage limits. You can drive as much as you want without worrying about mileage limits, and I'm calling this out because if you're leasing a vehicle, there are mileage limits that you have to account for. No wear and tear fees. You won't have to worry about paying fees for excessive wear and tear on the car since the car is yours. And those are the advantages, but let's now break down some of the disadvantages of financing a car, which include the following. Higher monthly payments than leasing. Monthly payments are usually higher than leasing, which is why it's super important for you to improve and maximize your credit score so that you have the best loan available to you in terms of interest rate. So the reason why it costs a little bit more to finance a vehicle than leasing is because you are paying to own the vehicle at the end of the loan term. So as a result, it'll cost you more than if you were leasing the vehicle. Depreciation. Cars lose value over time, especially when you drive it out the lot for the first time. So your car will be worth less than what you paid for when you sell it later on. Maintenance costs. Since you are opting to own your car for the long term, as your car gets older, you'll eventually, of course, inevitably pay for maintenance and repairs out of pocket. If you're with me so far and you're convinced that you plan to keep your car long term and you want to finance your vehicle, my advice to you is to try to buy a vehicle on a shorter loan term, and if you can afford to pay off a vehicle in 3 years versus 5 years, even though it's a difference of 2 years, you actually pay a lot less in interest. Let's say you were getting a $40,000 loan for a vehicle at a 5% interest rate. Just to lay out the numbers for you a little bit, if you get a 3-year loan, the total interest you will pay for the loan is $3,158.09. And for the same loan, but over 5 years, you'll actually have paid $5,290.96 for the loan. So that means the cost of your loan jumps 67% more when you choose a 5-year financing option over a 3-year financing option for the same amount of money. But you might fire back and say, but Alex, a 5-year loan has a lower monthly payment. It's true that a 5-year loan would have a smaller per month payment, making it more affordable, but my personal rule of thumb is that if I'm not comfortable with the monthly payment amounts on a 3-year loan, then I'd rather buy another vehicle that fits my budget better or not buy the vehicle at all. You should never be tempted to buy a vehicle that you can't keep up on payments on. Not only will it stress you out, but it'll put you in a tough financial situation and in a hole, and it's just not worth it. So again, if you can't afford a 3-year loan on the vehicle that you're looking at, do your future self a favor and don't buy it. Switching gears though, now let's do the same exercise, breaking down the advantages and disadvantages, but for the leasing option. Lower monthly payments typically. Compared to financing, leasing payments are usually lower, which means that you have a little bit more pocket change every single month. Ability to drive a new car. You can drive a new vehicle every few years, which can be exciting and fun. Warranty coverage. Most leases come with warranty coverages, so you won't have to worry about paying for repairs out of pocket. And my favorite, which is tax benefits. If you are using the vehicle purely for business, you can actually write off your lease payments up to a certain amount as a tax deductible, and in my opinion, that's probably one of the biggest advantages of leasing. Now let's go over some of the disadvantages of leasing a car, which include no ownership. You don't own the car outright, which can be a downside for some people, unless you decide to buy the car after your lease is up. But that's a separate transaction. Mileage limits. You'll have to stick to a set mileage limit, and if you go over it, you'll have to pay fees. Wear and tear fees. You'll have to pay fees for excessive wear and tear on the car because again, the car is owned by the leasing company, and if there is too much wear and tear on the car, they can actually charge you a fee for it. Higher costs in the long run. Leasing a car can be more expensive in the long run than buying or financing, especially if you keep leasing new cars every few years. The reason why is because you're not putting any money into equity of owning the car because you're continually leasing the vehicle, which is essentially renting. I mentioned this important thing a little bit earlier in the video. By the end of your lease, you will have the option to either buy or return the vehicle. And in this section of the video, I'm actually going to go deeper into what that means and how to assess the market value versus the residual value, which is going to be the key indicator on what you do to exercise your option to buy or to not buy the vehicle at the end of your leasing terms. Here's how it works. The residual value in the context of car purchasing is at the time of purchase. So what that means is the leasing company predetermines the future value of your car and what it'll be worth by the end of your lease agreement. Residual value doesn't always reflect market value. Those are actually two different values, and oftentimes they don't equal each other because it's very difficult to assess the price of an asset in the future. As always, let me give you an example so it's a little bit easier for you to understand conceptually. So let's say you signed a 3-year lease on a vehicle today. At the time of your signing, your leasing company has already figured out what your car will be worth by the end of your leasing agreement. That number is the residual value. Let's say that number was $10,000, nice and round number. Fast forward to 3 years into the future, your leasing agreement is coming up. You shop around to see what your car is worth and realize that your car is actually worth $14,000 in the used car market. And this was actually very common in recent years leading up to the pandemic because there was a huge car crunch. I know you remember that. And when that happened, used car prices were actually going through the roof. and of course it exceeded a lot of the times the leasing residual value that the company has assessed on your vehicle. So in this case, then purchasing your vehicle from the leasing company would make a lot of sense because you're pretty much getting it for $4,000 cheaper, right? Market value is $14,000, but the leasing company is offering you that same vehicle that's selling for $14,000 but for $10,000 because it was already agreed upon when you took the lease. Follow me so far? Now on the flip side, same scenario, but let's say that at the end of your lease, the market value of your car is only worth $7,000, but the residual value is still $10,000. Well, in this case, you can just return the car because you aren't liable for the gap between market value and residual value, which in this case is $3,000. So why would you buy a car for $10,000 when the market value is only worth $7,000? The answer is you don't. You just give the car back to the leasing company and have them deal with it. And of course, in the final scenario, if your car at lease end has a market value that is very close to or equal to the residual value, then it's totally up to you on if you want to buy it or if you want to walk away. Economically, it's pretty much a wash. That means there is no benefit or detriment to buying or not buying the car. All right, so that was a lot to take in, but hopefully that was helpful to you in understanding how lease agreements work and when to decide whether you want to buy out your car or not at lease end. And if that was valuable to you, don't forget to smash the like button and hit the subscribe button because again, it helps my channel. Now back to regularly scheduled programming. Now that we went over all of that, let me bring it back full circle and share what my preference actually is. Can I share it with you what my preference is? Is it okay? Listen, as someone who has both leased and bought, my personal preference is to buy or buy through financing. My reasoning is pretty simple, and that is that I'd rather own my car. And it's also a better option, much better option long term, and I don't necessarily need to be in the newest vehicle to impress other people. To me, a car is a tool, a means to an end, a way to get from point A to point B. On top of that, I like to pay off my cars within 3 years. I really value the peace of mind that I get of owning my own vehicle outright, not have to worry about payments or wear and tear fees or leasing companies setting up certain terms. I just really value the peace of mind of owning my own car outright, not having to worry about any payments. To me, the psychological freedom of that makes it more than worth it for me to own my own vehicle. Now, if all of this sounds good to you, then basically buying is the way to go because although short term, it'll cost a little bit more and it's going to sting monthly payments wise, long term, it's gonna be much more cost efficient because you won't have any more car notes to pay for. And once you pay off your loan, that money that you were putting aside for your car, now that money is going directly into savings, which we like. So that's my personal preference. I shared it with you. That's what I like to do personally, but everyone's situation is different. There's no real right or wrong. It just depends on what matters to you based on all the things that we outlined on this video. So there you go. I hope this video helped you decide if you want to buy, lease, or finance. And I know we covered a lot in this video, so feel free to bookmark this video to reference it later. And if you haven't yet, you know what to do. I talk about personal finance, business, and investing. And if you would like to level up in any of those topics, make sure you tune in. And until then, I'll catch you in the next one.